Good afternoon. Today is Monday, December the 19th. The time right now in Singapore is 1:16 in the afternoon. And this is basically a new week, and this is the week before Christmas. So, expect trading volume to actually shrink as we all prepare to go into the festive holidays. But the market are still open, so we still basically have to watch what's happening. Now, this week we have still have major figures to be released on tomorrow. We're going to be hearing from the People's Republic Bank of China as far as the interest rate is concerned. No major changes are expected. They have been holding their rate at 3.65 for a couple of months now. In fact, China is one of the two major central banks that have not been hiking interest rates in lockstep with the Federal Reserve. In fact, they have actually cut rate, to the current level of 3.65. Even if they do nothing on the interest rate front, there is a very high possibility they may continue to adopt a more, a more accommodative monetary policy by allowing banks to keep lesser reserve in their books, maybe to require lesser bank reserve ratio so that they can go out and make some more loans to the consumers, to the corporate worlds that need funding. So this is China's way of dealing with trying to resuscitate their local economy. We have seen last week the release of their Chinese retail sales is quite a horrible number. Market was down 0.6. And then negative 6%. So there's a horrible number as far as we can see. It means that China needs to reopen their borders, needs to relax their zero COVID policy so that people can move around and then move from province to province, go back to work, basically to create demand. Okay, so that is seen as a good sign, but we have to see the numbers in the next couple of months to see if there's going to be any positive impact. As far as the Dow Jones is concerned, last week we have seen the market went up to 34,712, and that's on the back of a release of the CPI numbers that was cooler than expected, which led investors to believe for some reason that the Federal Reserve may slow down the rate hike. That did not come about, and on the following day, on last Wednesday, we have the FOMC meeting in which the Federal Reserve actually hiked rates by 50 basis points, which is lower than the previous 4 rounds of 75 basis point rate hike. And but what market was expecting to hear was what the Federal Reserve has to say about 2023, and he basically eliminated the possibility of any rate hike going to next year, saying the interest rate is likely to stay high and for much longer. So there was no mention of any kind of pivot, so the market actually came off. So you can see last Thursday and Friday we have very massive sell down, which led ideas to the basically give the market the idea that perhaps there is a possibility market may have already peaked, and going to 2023 we may see continued weakness in US equities. Okay, so this being the background, definitely we will have to take it with a pinch of salt. Unlike previous years, just before Christmas there is a Santa Claus rally, so this year maybe Santa Claus may be missing. Either he has decided not to leave his cozy home, but basically the possibility of a Christmas rally may not happen this time. Okay, and over in the S&P 500 we can also see that prices in the S&P 500 hit a peak of 4,100 and then massively sell off towards the end of the week. And not only that, it broke a midterm support line, and that caused the market to actually have also the same notion that it may has already peaked. Although the market came very, very close to my ideal target price of 4,118, but the best it can do was 4,100, and that was it, and the market came off. And now the question is, how far can this drop extend to? Now the key to me will be looking at the November low, because on a month-to-month basis, the various months low and high become a red line for me. If the market cannot go up and it take out the previous month's low, that is to me very telling, because it shows very, very obvious weakness. So the level will be 3,698, just basically round it up to 3,700 points. Okay, if this level is taken out, then there's a very high possibility this high that we see at 4,100 is the high for this round. Okay, so I've already short the S&P 500 going to last week's CPI numbers. So I'm basically hanging on for dear life, and it's already showing very, very good returns. And I just want to hold it for a little bit longer and see how far this thing can go. Over in the NASDAQ 100, I have no position for time being. Market rally up to 12,166. Now, when you look at the rebound from 10,440, this is obviously a three-wave rebound, which is very, very corrective in nature. And when you compare this NASDAQ 100 rebound relative to the S&P 500 or even the Dow Jones, you can see that this rebound is very, very shallow, and added to the point that the market has taken out a midterm, a medium-term support line that give more credence to the idea the market has already peaked at 12,166. And if the November low at 10,632 is taken out, I think it is as good as gold. You can bang it, go to the bank and bang it, basically to say that the bear market has resumed its round. Now, before the end of this year, we only have about 2 weeks left before the end of 2022. And if the price goes below 10,440, that's it. And okay, the door is closed, shut. Those who have gone long will be caught in a what we call a bull trap. Okay, so there is no there is a high possibility going to 2023 we could see an extended decline into US for US equities. Over in the Shanghai Composite Index, we did not see a very, very large move. Last 2 weeks, the high came very close to 20,000 and then it's stuck there. And for last week, there was hardly any movement. The market was basically moving sideways. Now, the one news that keep the Hong Kong market afloat is basically the news last week. Okay, I was in Hong Kong last week and I came back just yesterday. The news was that the China decided to open up the border between Hong Kong and China. And this is something that will stimulate the Hong Kong economy, because ever since the COVID-19 and the lockdown between Hong Kong and China become more restrictive, there was hardly any movement of mainland Chinese going to Hong Kong for consumption. So that has negatively impacted the Hong Kong economy to the point that central banks have actually had to draw on their reserve to basically keep the economy afloat. So now that the news saying that, okay, they will allow Chinese from mainland to come over to Hong Kong, so hopefully that will open up a floodgate of Chinese consumers going to Hong Kong. So that will be great news for Hong Kong. So maybe that's the reason why the Hong Kong stock market did not react to the downside despite the very weak closing on Wall Street. Okay, this is a very different picture when compared to the Shanghai Composite Index, which is the mainland index. This morning, you can see the Shanghai Composite Index actually slammed down. Okay, and it come off very aggressively at this point in time. At midday, we can see that it is trading near the day low so far at 3,124 thereabout. And the key point here is that it has taken out a support line here. If this if prices do not go back into the support line and close anything below here, it set the stage for lower prices going forward. So this is a little bit different from what we are seeing in the Hong Kong market. Over in the Nikkei 225, without no surprise, the market actually opened with a gap in reaction to the weak closing on Wall Street, and the market went down to a low of 27,165 this morning. And if the market take out the 27,000 levels convincingly, then it's setting the stage for this market in Japan to mimic the weakness as what we have seen on Wall Street. Okay, over in the currency market, we can see the dollar yen has actually stabilized at 133.62 last week on at the beginning of the December, on December the 2nd. We can see this is 133.62 and it has more or less stable, and the market went up to 138. There is a possibility market may actually edge higher in the coming days. I am thinking maybe at the bare minimum, it can go back to 140.60 to 142.80. So this is my bracket of prices, which I think we will possibly meet some kind of resistance going into this price bracket here. But I think there is a very high possibility this market may already have bottomed out at 133.62. So for the time being, I think the possibility of any at least a rally, short-term rally is very, very possible. I'm actually quite positive on the dollar versus the yen rate. Okay, and tomorrow, like I said, the Bank of Japan is going to decide on the interest rates beside the People's Bank of China tomorrow the BOJ, which is the Bank of Japan, is also going to decide on the interest rate. No expectation is going to be, nobody expect them to do anything on the interest rates front because the interest rate is still negative 0.1 as of now. And that has been the case since the beginning of the year, despite worldwide, all central bank has been hiking rates in lockstep with the Federal Reserve. So that caused the interest rate differential between the Bank of Japan and the rest of the world to widen even further. That causing a lot of capital outflow from Japan, because as a money manager, for example, why would you keep your money in Japan when the interest rate is negative? While if you can park your money in, say, the US dollars, and you can earn the 4.25 percent interest rates by just parking your money in US dollars. And not only that, you possibly can also gain in terms of exchange rate. So if the Bank of Japan continues to keep interest rate at where it is right now, more capital is going to flow out of Japan into the United States dollar. And this is exactly what I'm thinking is happening. Now, of course, when the dollar wants to go up, the other major currency pair is likely to come down. And that is the case for sterling. Sterling went up to a high of 122.46 last week. And we can see the market sell off on Thursday and broke the support line, and this is coming on the back of a very clear bearish trend here. So I am hoping that I can actually get into get a leg in to sell. At this current point in time, I have no position, but I'm just placing the orders to see if I can sell within this bracket near 121.97 to 122.44. If there's going to be a rebound, it has to come within the next 1 hour and a half, because at 3 p.m. London opens. Hopefully there will be a little bit of rebound to get to allow me to get into a short position. Short term, I think the market has the potential to come to 1.19. This will be the immediate target. Okay. Over in the euro dollar, I'm also placing a sell order to hopefully be able to get into a short position. The high traded last week was 107.36, and it also broke the support line here. So there is a very real possibility. The potential for this move here is even larger compared to the sterling position, because if the market really decays all the way down, take out the December low at 103.30, it may 103.90, for example, it may actually decay all the way to 102.25. I've actually hoped that I can buy back at near 102.35 level. If this short position materialize, I'm still hoping that my limit order to sell will be filled as London open later on in the afternoon. Okay, as far as the euro dollar versus the Canadian is concerned, the chart appears to suggest the market may even go higher. The target for a time being is 138, but I do not have a position here because this risk reward ratio doesn't look fantastic to me, because the current price about 136.70 odd. Okay, to compare to 138 is only that little, maybe 130 pips potential. But if I'm wrong, I also gonna face the possibility of the market going down to test the December low at 133.85. So it's about 1:1, maybe not even 1:1. Okay, so the odds are not good, so I'm going to leave this currency pair aside and watch. Okay, but I'm very keen to sell the euro versus the dollar. Over in energy, we can see that crude oil prices actually rebounded from $70.08 last week to a high of $77.75 on the back of a news that the US is going to start replenishing the what you call the SPR, which is the Strategic Petroleum Reserve. And the Biden administration has already quoted a price. They will want to fill up the reserve at the price of $70 per barrel. So that technically is supporting the market. But when you look further into the statement that they mentioned, they need, because over the last few months leading to the November midterm election in the States, they have been drawing down this reserve. So that at least the inflationary pressure is not great going into the election. Now that the election is over, they will have to start to replenish this what we call the SPR, the Strategic Petroleum Reserve. They have drawn down 140 million barrels so far, and over the on last week itself, the news came in that although they're going to start replenishing the SPR, they're going to do it only at 3 million barrels, okay, which is nowhere near 140 million barrels that they need to buy. So on the hindsight, it is really, I think what they're trying to do is they don't want to cause the market to rally just because they told the world that they're going to start replenishing the SPR. So we will have to take it with a pinch of salt. But basically, technically, I think there's a very good chance $70 is now the floor for this market, okay? And if the market can go back and take out $77.75, the next barrier will be $83.34. My target is somewhere near $93.74. So I'm very bullish on crude oil. In fact, I'm already long crude oil, although right now my position is not showing profit, but I'm still going to buy some more at lower prices, maybe at $74. I'm going to buy some more, okay? And I'm going to put my stop just below $70. Over in crude oil, over in precious metal, we can see precious metal has rallied for $1,615. Not only one time, it has came, this level has came 3 times. Okay, the last time it came was the very first time it came was $1,614.92, and then it came again on this round at $1,617.30. Now we have one last try in November at 1,615.5, and the market here basically, you can see a triple bottom here. Market that actually stabilized and shot up all the way to $1,824.50 last week before it pulls back a little bit. So short term, we may see some further weakness going forward. Hopefully the price can come down to 1,725 for me to actually build my long position all over again, okay? Because longer term, I do believe crude oil prices has a lot of potential. How much of potential? I think it will not be too much to say that over the long term we can see this price again, okay? $2,000 per ounce. But the one that get me really excited is not so much on gold. I'm very excited about silver prices. Silver prices went up to a high of $24.13. You can see the structure in the silver market is a lot more positive compared to the gold chart that I showed you earlier on. But you can see the market is also seeing a pullback, and hopefully the market can come down a little bit more. But I do not expect the market to pull down to retrace significantly. Maybe the best I can hope is $22. So I'm hoping that market can come down to a more sensible level for me to build a long position going forward, okay? Over in the crypto market, we can see that Bitcoin, let me go down to the 4 hours time frame to give you the lowdown on Bitcoin. Bitcoin last week went up to 18,375 from a low of 15,480. And you can see that this market actually is going up in locks, in a step manner. But unfortunately, this line that I've drawn previously was a support line, but we extended all the way into the future. Now, as a price rally, you can see that at 18,375, the market refused to go up higher because this line now, instead of being the support, now become the resistance. And prices pull back from there is obviously telling us there's a lot of people looking at this resistance line, okay? So if the prices started to drift, there's a possibility it will come back and test this low in November. The November low is 15,479, and there's a very high possibility prices will simply because of lack of motivation may drift lower and lower. The long-term view for me is Bitcoin, there's a possibility it will decay all the way to 12,000, maybe even 10,000. So the time to go into Bitcoin or even the other crypto assets may not be now. You have to wait for the market to have one big move. I am expecting a flush down to take out all the weekends people who have been progressively been buying, hoping that this is the bottom. So if we can have another sell-off, that will basically flush out all the buy orders, and then that's when I think the market will go into a panic mode, and then it's about time we go back in again, because every time we have seen this so many times across so many different asset class, we need to have the market to sell off to take out all the weekends before the market turn around. So if the big sell-off come in, do not worry, look for levels, just look at and then look at the price structure and look for signs the market is stabilized. Whenever you see a reversal signal, either in the 1 hour or the 4 hours time frame, or maybe even the daily time frame, that is a signal to jump back in again. So I'm waiting for that big flush down, okay? Maybe it will happen this year. It may not happen this year. Maybe it will happen maybe in early part of next year. Okay, for Ethereum, you can also see the prices also rallied to $1,351 before it comes back down, and then this time it also take out the support line. So again, Sunday we can see the market actually sell off for near $1,300, all the way below $1,200. So we can see this big move here has massively damaged the bullish outlook, and there's a real risk that the market will go back and test the $1,000 level. Now, Ethereum, Ripple itself is a victim of the lack of news, because we know that for some time now, the SEC, which is the Security Commission in the States, has been trying to label Ethereum during the time when they launched this token in the States as a non-security. Now, the SEC is saying that this token should be categorized as a security. And if that's the case, then of course, Ripple will be under a law, under a cloud, okay, and this is the news that people have been waiting for, some kind of resolution. This case has been dragging on for far too long, and it has set a lot of energy from this market. No idea when a verdict will be released, okay, until a clearer picture comes up from the legal front. We will not dare to actually promote this coin. But from a risk reward perspective, actually, okay, now the price is at 33 cents. If the market can drift a bit lower to, let's say, closer to 32 cents, this makes a lot of sense. Because if I'm going to take out a speculative long position, this is the time to do it. Because anywhere from here onwards, all the way to 31 cents. If I put my stop just below 31 cents and I buy this token here, okay, the possibility is, if I'm wrong, I only have this much to risk, okay, from where the price is all the way to just below 31.92. But if I'm right, there's a high possibility the market will rally back to challenge this high at 41 cents. So from a risk reward ratio, this is actually a great setup for a speculative long position. So this is my view. I'm not asking you to do that, but that is a possibility. Okay. Binance coins, of course, lately have come under a lot of what we call it, under a cloud. Okay, because what happened is that Binance, the exchange, has been accused by the US Department of Justice for money laundering. So if this is the case, of course, Binance will be now under the microscope. And of course, any token, any kind of coins issued by the exchange is definitely not going to be doing well. And it did, okay? From a high of $317.60, it has gone down to $220 before we see a rebound. So until this legal case with the Justice Department can be resolved, there will be this negativity surrounding this particular token. So downside is obviously open. Okay, so the other coins I'm not going to go further in because they are basically the same. And this is all I have for you for this for today. Tomorrow I'll see you again. In the meantime, take care of yourself. Bye bye.